fundsupermart.com.
Hello everyone, with us today is Stephen, Head of Investment Markets Research at First Day Investments. He will share with us his global market outlook for 2013 with a focus on the Asia ex-Japan market. What macroeconomic themes do you see happening in the coming year?
Thank you, it's my pleasure to be here. Well, I think the first theme is the continued recovery of the US economy, and that's really being driven by the quantitative easing out of the Fed. I think markets were a little bit worried that quantitative easing may be coming to an end, but the Fed chairman's made it very clear that he's going to keep pursuing that policy for a long time. So even though there's some political risks in the US around the budget, I think we should expect the US economy to continue to recover this year, particularly the housing market. So that's a good development. And I think, unfortunately, Europe still looks like it's going to be very weak. It's stabilised the financial system, but the economy is in recession, and I think that's going to be the case for most of 2013, that Europe remains quite weak. But where there's, I think, really upside surprises is here in Asia. China, with the leadership transition going through, it now looks like we're going to get about 8% growth this year in China. So that's a very, very positive development. But I think the real surprise is actually Japan, where the new Prime Minister and the new leader of the Bank of Japan have made it very, very clear that they're going to be quite aggressive on policy. So after 20 years of deflation, maybe there's a change in direction for Japan. So more growth in China, more growth in Japan. I think that's really positive for the rest of Asia, including Australia. So I think this year, 2013, the global economy should grow more rapidly than it has for the last 2 years, with that growth really centred on Asia. The big economies like China and Japan and India should do better as well this year.
What are the key risk factors that global economy is facing?
Well, I think probably one of the major risks is, when does the US end quantitative easing? So, we know that the US equity market's at all-time highs, really really driven by this liquidity from the central bank. So at some point in time, the Fed's going to have to withdraw this liquidity and start unwinding quantitative easing. I think that's probably early 2014 rather than this year, but I think that's a key risk for the economy. Can it transition to being based on what's happening in the economy and the fundamentals rather than liquidity from the central banks? Now, Europe is probably still a source of risk, unfortunately. It looks like they've got it contained, but the Italian election reminded us that politics can change very quickly in Europe. So I think that remains a risk. But within Asia, I think the outlook is looking more assured, particularly with the transition of leadership in China and the new leadership in Japan.
Asia ex-Japan remains one of the fastest growing regions. What's your outlook on Asia ex-Japan equities in general?
Yeah, well, I think this year is going to be another good year for Asia. A stronger China, a stronger Japan should help all Asian countries grow. Faster exports, more capital inflow, this loose monetary policy still there, a bit of a restocking cycle as well. So all those things suggest to me that the Asian economy grows faster this year, and the private sector listed equities should be able to capture some of that extra growth, and that should help the local equity markets.
With First Day's strong expertise in Australia, can you give us some insights on the Australian economy, and which sector will perform better in the coming 1 or 2 years?
Sure. We actually just had our fourth quarter GDP numbers, so that showed the economy growing at 3.1% the year to December 2012, so that's pretty strong growth. The biggest source of growth over the most recent period was net exports, so really pleasing to see the export sector growing very strongly. Of course, that's related to resources, so iron ore, coal, offshore gas. Mining capital spending still remains very, very strong. It's going to be softer next year than this year, so that mining capital spending is peaking and coming down a bit, but that's still at a pretty solid level. But we do see the economy transitioning away from mining-related growth to household growth. So Reserve Bank's been cutting interest rates. That's going to help the consumer. We need to see an increase in household construction. So the strongest parts of the economy at the moment are mining-related spending and exports. but we need to see more growth in household construction and household spending. And so lower interest rates will help in that transition period.
On the other hand, what's your outlook for Asian fixed income? Is now still a good time to invest in this asset class?
Well, I think as quantitative easing comes to an end in the US, the key issue there is how quickly do bond yields rise across the US, and then that will feed back into other markets as well. The higher growth in Asia does suggest maybe a little bit more inflation pressure. So I think that the general trend through this year will be for bond yields to move a bit higher. But I think for bond investors, the critical thing there is, Asian markets offer much higher spreads than other markets around the world. There's not the credit rating risks that there might be in places like Europe. So you can get higher yield, higher reinvestment yields in Asian fixed income. So I think that sector looks really quite promising.